Cohesion policy is the EU's main investment policy, the second largest in terms of funding, and accounts for 1/3 of the current EU budget. Over the past 30 years, cohesion policy has financed projects all around Europe to support the development of regions lagging behind and foster innovation in more advanced areas of Europe. Cohesion policy has also become the most important EU tool for integration by promoting economic, social, and territorial cohesion within the European Union, especially after the 2004 enlargement. The main criterion to award EU cohesion funds is the GDP per capita, based on which there are 3 categories of regions: the less developed regions, regions in transition, and the more developed regions. This categorization affects the co-finance rate of national governments and the available budget per region. And because regions are different, they have different needs. Therefore, cohesion policy adapts to them. So let's have a look at some of the projects the EU has funded over the years. Since Bulgaria joined the EU in 2007, 2 new metro lines have been built in Sofia's underground thanks to EU money. More than 300,000 people who take the metro every day have benefited from this project. In transition regions, EU funds help to develop projects aimed at social integration. The EU has funded Back to the Future, a peace-building program aimed at offering counseling and therapy to all young people who have been affected by the conflict in Northern Ireland. As funds for Northern Ireland might be affected by Brexit, the European Parliament has requested the Commission to keep supporting peace building in the region after the UK leaves the European Union in 2019. More developed regions invest more EU funds in innovation. The European Regional Development Fund has provided financial assistance for trials of robot buses in Finland. Driverless buses may soon be a familiar sight, at least in Espoo, Helsinki, and Tampere. These are some of the thousands of projects the EU has funded through cohesion policy. In the upcoming months, the Commission, the Parliament, and the Council will negotiate its reform in the context of the new long-term EU budget. While the EU executive has proposed to introduce budget cuts of between 7 and 10%, the Parliament wants to keep the numbers as they are. The Commission proposal aims to maintain GDP per capita as a predominant criterion, but wants to introduce new criteria such as youth unemployment, climate change, and the reception and integration of migrants to ensure a fairer treatment for all EU regions.